Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the epic fake out on the Bitcoin and stock market charts, which just bamboozled everybody in all of these industries as our heads got whipped left and right, up and down, and nothing made sense because the logic they used was totally distorted. And so, what happened, guys? Well, low liquidity in the markets and highly over leveraged positions allowed market makers and large entities to push the market up and down, in and out, deeper and deeper, right? And so, guys, you had a very good time, whether you were coming or going, and everyone over leveraging probably got absolutely screwed. Whereas for traders, virtually nothing changed. At the end of the day, it pretty much worked out to a balance. However, because the market was able to dump so hard, even if it was just a flash dump, that reset the indicators enough to bring the technicals in line with bullishness, which is why you see all of this bright green on the charts over here. In other words, the powers that be saved their own asses from the mother of all crashes and can live for another day. Those CEOs looking at their end of year bonuses shrinking got a little bit of a sigh of relief, right? As stocks held in line, even as they begin to write the layoff orders themselves just in time for Christmas, right? And guys, that's right. No one said capitalism is fair, but as for macro, how was this justified? What was the narrative? Well, first of all, a strong dollar is bad for stocks, right? A weak dollar is good for stocks, and that's because everything is traded against the dollar. It just so happens that everyone believes, right? It just so happens that everyone believes in the dollar right now and loves the dollar right now. And so everything else is just going down as they de-risk and get into U.S. dollars. They even de-risk from their own national currencies as they go for the US dollar. But the US dollar is in a topping process, right? We don't know if the top is going to be 114 or 118 or 120, right? But eventually, enough countries will sell off their high priced dollars to buy back their cheap, worthless local currencies like the British pound, the Japanese yen, the euro, and the Chinese yuan, all these third world, currencies. They have to do this to prop up their own economies before they collapse like banana republics undergoing hyperinflation. So the dollar does have a limit in how fast it can grow. Of course, the dollar got smacked down this morning as the UK and others shifted policies to strengthen their own economies. You may have saw in the news that the UK did a big U-turn on the destructive policies that the new administration over in Great Britain had, suggested that they were going to implement, and that gave the market some much-needed relief. If you're a trader, you can only hope that they keep it up and that the dollar continues to go down. Additionally, there's some political shenanigans from the CEOs of America going on, right? I don't know if you watch any of these financial news channels or anything, but they have just been going in full force, trying to petition the Fed to slow down. They are just, spending money left and right on people to come out and speak against what the Fed is doing, because of course it affects their bonuses, right? And they don't care about the U.S. economy. They only care about their contract, and they don't care how many people they have to lay off or what damage is done to these companies. As long as it's government government policy, quote unquote. They're looking out for the interest of their corporations, and so it's just the government doing it to them, right? And so they can petition all they want for these politicians to do things that fluff up their own, retirement, their own bonuses at the end of the year, and they really don't care what the long-term harm is to the country. And so they've decided to once again to redefine words, and now they're redefining what's good, right? You see the month-over-month CPI data, right? That was bad for markets. If you look at the core CPI, it was the same as the last measurement. It had been expected to go down. That should have dropped the markets down. And then you see the consumer price index month to month in general, not just the core, and you can see it actually quadrupled, right? And so that was more than the expectation for it to triple. And so all of this should have been pointing in a down direction. And then, of course, the CPI year over year is basically the same, so that's moot. And anyway, no one looks at the year over year, and you're really supposed to be looking at these month over month trends. But the markets decided to reinterpret this as good, all of this bad news, by comparing the quarter over quarter, which isn't usually what you do, but they decided to go quarter over quarter because that's the only place that they could find good news, and also because, let's face it, CEO bonuses are starting to be affected, right? And so the logic here is that the Fed wants to see several months in a row of improvement. And since the market is failing month over month, the desperate CEOs are pushing a narrative of, well, we had one improved quarter, so maybe Jerome Powell, sir, maybe will you back off? We've got these bonuses that we want to collect in December and January, right? And so we need quarter four to be a nice one, right? But I've got news for you guys. Jerome Powell is highly unlikely to back off. He was originally hired by Trump, right, to cause hyperinflation intentionally, so that Trump's quote unquote, great economy, which was just, $9 trillion of money printed by Trump, Powell, Pelosi, and McConnell, right? They're all conspiring for their own power and their own self-interest. So they just money printed $9 trillion in a bubble stock market, and the whole COVID disaster, right? I mean, this was just an absolute disaster for the economy when he basically put Anthony Fauci in charge of America for 2 years, right? And so these guys intentionally pumped stocks in a hyper bubble, all for show, so that he could say that Trump's economy was the best ever, right? That he could say that his quickly shriveling stock market, in the face of all these closures, not just in the U.S. but globally, he wanted to say that his stock market was bigger than Obama's, right? The biggest fake economy ever in the history of the public. And here size does matter, because if we had continued under Trump's Federal Reserve, it would have destroyed the dollar and probably the republic, as we would have been crushed under hyper inflation, the likes of which we've never seen before. And so eventually, Powell's term, it actually ended in 2022. So this year, only now did Powell's term end. Of course, the Federal Reserve is independent from the president, and this is by design, so that an incoming president can't just manipulate the economy. They have to deal with the policies that the country has had in place when the previous president, put in power the Federal Reserve chairman. And so, but Powell did manage to get rehired by Biden, and with a one specific agenda: to kill inflation, to kill the hyperinflation, to pop the everything bubble. You see, Powell is just a hired gun. He's not an intellectual, guys. He's like a dog. You give him an order, and that's what he does. But again, guys, there's that catch. The Fed is independent. Once you release the dog, it carries out the order. There's no way to recall it, right? Trump wanted unlimited money printing to fakely double the stock market, twice as big as Obama's, despite the real economy being crushed everywhere we looked. And Biden wants inflation crushed, so Americans don't have to carry around their money basically in wheelbarrows, which actually happened, for example, in Nazi Germany, which may have been the model that Trump was basing his strategy on. They actually did fund their entire war apparatus by just hyper printing money, and despite the hyperinflation going on, and despite being economically wrecked after World War One, these guys had to carry their money around in wheelbarrows, but somehow, obviously, the Germans recovered and went on to start World War II, funding perhaps the mightiest army in the world at that time. Of course, since Powell isn't very intelligent, right, he risked going too far and plunging the U.S. and perhaps even the world into a global recession. And in combination with these other idiots in Europe's central bank and in the Japanese and Chinese Federal Reserves, and of course in Russia, etc., 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 there's no limit to idiocy around the planet. And the scary thing is that it looks like Russia, China, Europe, and the US are again hellbent on a world war to solve their inflation and their economic problems, or at least have global scapegoats, the way that even Hitler, right, put that in front of the population and mobilized the populations through these economic crises. And we don't want to see we don't want to see that come to fruition. But nevertheless, so there's that, right? And then on top of it, of course, the rich get richer and the little guy always gets the shaft. But don't worry, because we'll all get to die in a lovely nuclear holocaust, apparently. And that's, as you know, the great equalizer. I don't know about you, but I don't think that Powell is actually going to back off. Real bond rates are still negative. We haven't even begun to solve inflation. And so while the White House and corporate America may be on the same side in begging the Federal Reserve to change course for politics and for end of year bonuses, it's still a question whether Jerome Powell and the Fed will soften their stance or not. And so, guys, that's why we're even seeing, projections for a possible 100 basis points increase. Today, nobody believes that the Federal Reserve is going to increase basis points by 50 basis points only. 0% of the market is pricing in 50 basis points. 100% of the market is pricing in 75 basis points after this bad news today. If it's bad news, why are the markets pumping? Look, it used to be 80%, it used to be 50% that believed 75 basis points would have to be increased. A lot of people thought that it was going to be just 50 basis points. And so we've been getting bad news, bad news, bad news for the market. And again, this is the truth. These are the numbers that don't lie. The numbers that don't lie tell us that 100% of the market thinks it's going to be worse than expected. And so when you're hearing all of these people trying to pump up the market, if you're seeing these kind of fake, rescue operations in the market to try to pump it up by whatever, market makers or movers and shakers are out there, by whatever back channels governments have to prop up the stock market, whether through the Treasury or the New York Fed or the Federal Reserve itself, something is going on where we just got a boost out of nowhere, and no one believes that what's happening right now is good news. And so, is this going to be an exit strategy again for the millionaires and billionaires? I'm not sure. But in other words, are we getting bamboozled into a fool's rally only for the super wealthy to dump all over your face yet again? Guys, to find out, let's let's find out by looking what's actually on the charts. And for that, of course, I'm using volatility, price action, momentum, and our good old EMAs, right? And so, just based upon volatility, right? If we take a look at how the volatility is looking, if we went to the daily on BTC, we can see that we've had a number of volatility flips over here. And so while we were pointed to the downside originally, or rather to the upside while we were expanding in volatility, we had a volatility flip, and then we were pointing to the downside while it was expanding. And then we had another volatility flip, and again we were pointing to the upside. That's where you saw this rally today. And then look, guys, we're starting to pinch off again. Are we going to have yet another volatility flip that could take us even lower? What is volatility, right? Volatility means to be volatile. So this is pretty volatile, guys. And if we go ahead and take a look at the professional exchange, we can see basically the same thing going on here. Where on Bitcoin, you see that we are reaching a maximum level of low volatility, which actually just suggests that something crazy can happen in the expansion towards volatility. Okay, so low volatility is actually quite explosive, and and then what it breeds is volatility itself. The craziness comes out of that. Okay, and so what we're seeing is that the market once again is being situated to where it has to pick a direction. And as you see the price of Bitcoin falling, we are now around 19,600, right? 19,500. We are dangerously at levels that could have our volatility flip once again to the downside. And so 19,500 is going to be that magic number. And I don't know if you can see just how close these 2 points are here, but they are basically kissing each other. And so it is heads or tails whether that volatility is once again going to explode to the upside or to the downside, or who knows, perhaps even both. That's going by the professional exchanges. Of course, here on the 24/7 exchanges, where there is a little bit more manipulation by the exchanges themselves, you can see that number is 19,250 to slow down. And so my bias, by going by an average of the professional exchange and the 24/7 exchange, my bias would be that we're leaning towards the upside right now, and that you shouldn't be a perma bear right now. Pardon me, just getting a sip of coffee there. You shouldn't be a perma bear because something interesting is happening. Now, if both of these agree that we're going to be flipping to the downside, then of course I'm going to have my bear hat on, which I love to wear. But we might just consider that we're having a healthy pullback unless we violate that 19,500. So, guys, that's volatility for you. Let's go ahead and take a look at some of what's going on. And to start out, let's just get a macro perspective of our, overall situation on the Bitcoin chart by putting on our good old alpha origin channels. And as you can see, nothing too major has happened here. If I zoom in, we are still at this juicy level where we can touch the grass. And look what happened right here, guys. We basically just poked through this little layer. You guys know I had that layer out here yesterday, And again, we're just touching the grass, and so there is the possibility that we continue to break down, and that we touch a layer even lower, like we did in COVID. And additionally, it is possible that we are in a macro stocks and commodities super cycle, just total reset. And if that's the case, we could even come way below those levels and touch the bottom of the grass as we enjoin one of these kind of macro cycles, right? Something like that. And so, guys, don't underestimate the ability of this chart to continue to go sideways and down. Even if you would expect some type of a bounce, it may still overall push sideways and down, as this bottom half of a sine wave gets printed the same way this half of a sine wave got printed. Okay, so just consider this like a Pokemon ball, and this is the bottom half of the ball, this is the top half of the ball, and Bitcoin is contained within it. It's obviously divided, of course, because it's a sine wave, right? And so, guys, but we're not just going to print top halves, right? Every top half has a bottom half, and so sooner or later, unless this chart is just continuing to go balls to the walls straight up, right? Because this is in log scale, so it's already parabolic. But this is what the real chart looks like, right? This is the real chart. And so that looks like the Japanese imperial flag right there. But if we put it on log, just to calm the damn thing down, then you can see that we would really have to go parabolic for this sine wave to be acting like like this, right? Like that's just a little bit too much to ask, because again, guys, oops, this is the real chart. And so how are we going to follow that line all the way up here, right? Like that's what you would be asking Bitcoin to do. This is the line that I drew, and it looked pretty innocent when I drew it there. But look, you're asking Bitcoin to basically just jump to 1,250,000, right? So let me put that back on a log, and you can see that this type of a trajectory for the log scale just is improbable and highly unrealistic. Therefore, my alpha origin channels represent, the best likelihood of some type of a realistic expectation, which is that probably our sine wave is more like this, and that we could end up visiting these levels down here. Now, we don't have to. You can see that in this top half, right, we had some weird little choppiness, right? We could get some type of weird little choppiness like in the bottom half, and so maybe we never go below a certain level, because over time, right, prices rise over time, and so it doesn't matter. You could be going down on the green level while at the same time you're going up in price. Okay, so don't be confused about that. This is a parabolic chart. It's just presented linearly, but this is the log scale, so it is parabolic price action that we're looking at right here. And so I am not bearish on Bitcoin, but what I would suggest is that we do have to be on a lookout for this type of completion of a bottom half of a sine wave on my alpha origin channels. Okay. Guys, let's go ahead and move out of there. Of course, we have our good old CME gaps that are part of our structure that we should be looking for. And so whether we have a mean reversion to the upside, or we have that kind of sine wave mean reversion to the downside, then we do have this range between 35,000 and let's just call it 9,700, which we could play in, where we do have some type of data missing from the charts, which markets love to fill. And so, guys, I would just suggest that as we look forward, who knows what could be in store for the future of Bitcoin, but it could be something like that, right? It could be something, like this, right? And so, like these data points probably will get filled. Just if you just go by likelihoods, there's a 90% chance of them getting filled. And so, again, that's another reason why I do have I keep that bearish perspective in my pocket, even if we're looking bullish on this or that day, because I do know that there is data to be filled. And just because 90% of CME gaps get filled doesn't mean that these ones have to be filled. Of course, they could be part of the 10% that's just left behind forever, right? And so, guys, that's our CME. We also have this head and shoulders. Let me get out of log because it'll distort it. We also have this head and shoulders, which takes us down here to 15,000, right? So basically in that neighborhood of 15,000 from this head and shoulders up here. We may have another head and shoulders down here. This is a very sloppy one. It doesn't have to be head and shoulders, but there is a possibility that it is, and I'll show you why. Head and shoulders isn't what you think. It's not just a pattern, guys, okay? It's basically a set of a lower low and a lower high that implies a continuation to the downside. So let me show you what we have going on here. First of all, we have our high and we have a low, right? And so here we have a lower high, and then if you look, we are on lower low watch, right? And so just from this huge structure, we would say, okay, this is not a confirmed head and shoulders yet. But if we just, move this shoulder over slightly, because this also could be a neckline. You see that right there? This could also be a neckline. Then what we're looking at is in fact, okay, there's our high, but then our low is over here. And so now what are we seeing? A lower high and a lower low, because this is actually lower than this one over here. And so what does that suggest? A downtrend. And so now we've put in a lower high, right? Yet again. And that would imply that if we do have continuation to the downside, it could be another lower low. We have a downtrend right now, guys, okay? Like, I know this is very sloppy, and you can say it has a double bottom, but that wick doesn't really mean anything. This could still be just part of the formation of the next lower high, right? So high, next lower high, just a lot of crazy volatile price action, but that's just lower high. And here we have a little low right here. Here we have a low that was basically a double bottom to it. Here we have a lower low. And so could we put in yet another lower low as part of this pattern? Therefore, I cannot be a perma bull either. I cannot get overly bullish based upon the structure here, guys, because not only do we have this head and shoulders formation, but we do, of course, have a pattern of lower highs, obviously, in place, and also the potential for yet another lower low to come to fruition in the next couple weeks. Now, I'm on the daily, so these things can take weeks to play out, but I just want to remind you that this type of bearish structure here that you're starting to see, um, it takes time, okay? Like you can't just look at all the intraday price action and then derive something from that. It doesn't necessarily work that way on the macro. And so what do we see here? We just see a wick, okay? We don't see a higher low, right? We're seeing basically a lower high, but we're not confirming anything in terms of where a low is, and we will have to, break basically 2300 to make a higher high. So we better break 23,000, pardon me, 23,000 if if we want to see some type of a macro change in structure, at least on this local level here. So guys, I'm neither a perma bear nor a perma bull. I'm just being a clever little alpha monkey about this price action right now. And of course, we have our support and resistance, which we did get a nice bounce of, just like we got a nice bounce there, and we got a nice bounce over here. And so, guys, like this whole region has been nice and bouncy for us. There's just been multiple levels, 1, 2, 3, 4 levels that have given us nice bounces. And so we are just chopping around in this zone. You can think of this as just a huge range between this red level here and essentially this lower level, but we just break it down into 3 kind of bouncy zones. At least that's the way that I'm analyzing it. Other people might analyze it in a different way. And of course, we do have our macro downtrend resistance here. And then we also have our second boss just flowing through here. And the importance of that second boss cannot be understated. Why? Because look where we're getting a rejection tonight, guys. This is why I waited to make this video, because I wanted to see how we were going to handle this level. And once again, you're seeing a hard rejection off of this zone above this dashed line. Price action just has an incredibly difficult time to push through there. And so what do we see? We see the Bears winning, 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 the Bears winning. And once again, the Bears are putting in the fight. It's the time for the Bears to be fighting right now. And yes, the Bulls put in a noble attempt, noble attempt, a noble attempt. And yes, once again, the Bulls put in a noble attempt, right, with this kind of scam wick. But that's the same wick that we saw over here. And if you guys say like this is an amazing hammer candle, like look at the power behind that one. Well, look, we just had one, right? We just had one the other week, right here, right? And so, what's the big deal, guys? Like this one looks even less convincing than this one. And what was this? What was this one followed by? Plop, plop, right? We had a nice pump all the way up to here, but then plop down. Like this has just been the name of the game. We've been having these kind of crazy wicks, right, all over the place, and they're all about the same size. So this is what the market can move us by in these low liquidity environments. And so I can't get super excited about this. Just pushing up, like some of these little things, like it's we just do it all of the time. And until we break out from this second boss, how am I supposed to be excited? Until we get out of these, these green levels that I have of support, how can I say that we're at anything except at support? Like we're not moving anywhere. I want to see us break out of that support zone and start flying across this gap, and then I hope that we come up to a 24,000, right? 25,000. That's what I would like to see, and then perhaps even have a chance to battle these upper levels. But so far, just for months and months and months, we've been stuck in this tar pit, and we keep pressing a little bit deeper every time we press. Ever since back here, I don't know if you can tell, but just ignore this like wick right here. But this is a certain level. This one is lower. This is lower than this one, and this one is lower than that one just by a hair, but it is in fact lower. And so, guys, like we are making lower lows continuously if you just ignore the panic wick from when we originally established this level. So guys, I don't see anything bullish here. I don't see anything super excited. And yes, on the technicals, maybe because pushing us down like that does reset all of the indicators. By kind of stressing them to the downside, it does allow us to pump more easily because all of the traders see that the technicals have been reset, that their indicators have been reset, and so they can trade to the upside. But it doesn't mean that we've overcome anything like that, and it can be just a massive manipulation. So we really do have to watch this space. And then, guys, I just want to show you that we also had this type of broadening right angle wedge, right, up here, which did have a measured move, essentially over here to the downside, and we hit that precisely with that wick, okay? So this wick more or less satisfied this right angle broadening wedge. And I think if I go to a 4 hour, you can see that a little bit more clearly where we had this kind of structure. And if you just ignore, right, if you just ignore this big old fake out up here, then what we had is a broadening wedge. And, it would have been something like this, and then breaking down, the measured move, of course, was that first kind of, what's it called? The arc, the underpass, whatever it's called. And so that was the measured move that we got. And then we got a nice bounce off of that technical area. Or we can just consider, of course, in more simple terms, that we had more or less just an overall rectangular area here. And the breakdown of that would be the height of the rectangle, same as the broadening wedge measurement. And so that's exactly where we hit as well. Now, within these formations, if this isn't exuberance, if it really is something else, then we can consider that perhaps there is a bit of a head and shoulders here. Again, like these formations that take place over a couple weeks, they can take several days to play out. They can take a week to play out themselves. It can take some time before they play out. That would have a measured move down to 17,250. Which would put us at our previous low in June, or just slightly lower. And so, guys, structurally, right, just based on price action, because we looked at volatility, now we're looking at price action. So, based on price action, I can say that there is a chance that we could still see ourselves headed to the downside, perhaps even to 17,250 as a first stop. And I don't know if you can see this a line that goes across my this green zone here, but that is a support level. And so it's just interesting. There's a measured move to that support level. It's just this is a very big green zone because it's kind of vague, right? There wasn't a lot of price action in the past for Bitcoin. So this area is a little bit confused, and so that's why I just like make it a little bit vague over here. Guys, okay, that's our structures, and then let's go ahead and just zoom in on this accumulation wedge that I was showing you about a week ago, which is what got us the pop-up in the first place, right? That first pop-up, just boom, right, like that. And it looks like the bulls just want a second chance, right? They want a second chance at that accumulation wedge. And so what you can see is that they are actually, it's almost like there was a fake out to the upside, like a fake out to the upside, another fake out to the upside, a fake out to the downside, and now the accumulation wedge is still there. And so, what does that tell me? Um, First of all, something weird happened right here, but that these buyers that participated in this accumulation, because we're just talking about price action now, the buyers that participated in this accumulation wedge, they still are there. Okay, like they're still there, they're still hungry. So this was a liquidity grab. This was a retest of these buyers' appetite. And the buyers decided that yes, we still want to accumulate. And so that's why we ended up once again at the top of this accumulation wedge. And I hope that a little bit of market psychology, can perhaps give you an insight as to what we might be seeing with this really skinny wick here and this price action literally hovering at the, at the top of that accumulation wedge where sellers got exhausted. And so now what you're seeing is us breaking down, right? After testing the buyers, you see us breaking down and retesting the sellers to see if the sellers want to drop us back down. And if the sellers continue to be exhausted, which by the way, this has been very choppy. So these guys have been undecisive, but the buyers have been stronger overall in this area. And so if the sellers are still fairly exhausted and not too terrified, and if the news, right, if those CEOs spending huge amounts of money to get the financial news channels and the financial magazines and the financial websites to say that there's going to be a rally, um, they might they might get it, right? They might get it. And so, guys, now you understand why volatility was pointing at 19,500 as being a key level that we can't lose. As you can see, that corresponds precisely with the top of my accumulation wedge. So boom, like one concept there for you guys. Put that in your back pocket. Guys, let's go ahead and just look also at that rising wedge that we had structurally on Bitcoin. And you can see that how we broke down here in this area was to be expected from that rising wedge anyway. And while this price action may have gotten inverted somehow, anyway, this rising wedge formation, the psychology of it did end up working out into this area. And when we were back here, I said most of the measured move had taken place already, and I did suggest it could go lower based upon the measured move of this rising wedge. You can see my yellow line, right? You see this? I had this drawn out before this dump happened. And I was talking to you guys about this in the last episode that this was highly possible that we could get this measure move all the way down here, even though most of the move had already taken place. And if we found some strength, maybe we avoided it. Well, we got a skinny little wick all the way to the bottom of the measured move of that rising wedge breakdown. And so this technical formation has been completed, right? It's been completed, and it's no longer operable. So this is another hurdle that got cleared by this price action, which was the removal of that potential for the downside just off of the rising wedge itself. And then I would like to point out we popped up and we're actually testing the underside of that rising wedge, and I would just hope you guys understand, because this is really essential for price action. A lot of people won't be showing you this stuff. We're bearishly retesting the bottom of that rising wedge, right? And so we are free to continue to the downside, having retested this as a bearish breakdown of this rising wedge. In fact, this rising wedge was so bearish we couldn't even make this like standard third top here. Like we just broke down, right? Like right away. So, guys, again, like I hope that gives you some insight into price action. So we've got volatility, we've got price action. Let's take a look at our momentum. And for that, I may need to just zoom in a bit. And what you can see is that we are above and just testing the weekly 4 EMA, which is a nice effort. It's good that we're testing that one. That does favor the bulls slightly. If we can capture the weekly 4 EMA, that's slightly bullish, guys. It's not really bullish, but it's slightly bullish. And then you can see that we are above the daily momentum zone, where you have the MACD and the Stokes both overlapping each other at the same price. And so those are both right there. And as long as we hold above that 19,250, which I've already pointed out just using the volatility, but using both the MACD and the Stoke, you can see 19,250 is a kind of a minimum threshold that we would need to meet. And then just in order to secure that bigger kind of macro concept of bullishness based upon momentum, we would want to hold above that weekly 4 EMA at 19,650, let's say. And of course, just based upon the professional exchange, 19,500, as well as that accumulation wedge, right, above 19,500. So that's kind of like the area that we're in. So we are doing what's necessary to have a bullish bias. Not a really super great one, but just leaning to the bull side. And so let's go ahead and take a look at our momentum pools. Guys, the last time I left you, of course, these momentum pools, like we were testing the bottom of it, we were breaking down from it, and having broken down from that, having lost our momentum, not only on the daily, but also on the 2-day, yeah, we just got slaughtered, right? We just got slaughtered losing our momentum. And after we lost our momentum, of course, our trajectory was to the downside. But that was just a quick thing, and then of course that only lasted 1 day, as you can see for my 2 to 5 day projection, which is why I make these 2 to 5 day projections. We did end up recapturing the 2 to 5, and look at where we're sitting. We're sitting right on the top of my 2 to 5 day projection. Where did we do a test, a bullish retest right there? Boom, right at the bottom of my 2 to 5 day projection. And I made this projection multiple days ago, whereas this price action was just yesterday afternoon. And so, guys, like that momentum zone got respected perfectly, both the breakdown of the daily and then also the key levels of support for the 2 to 5 day projection. So please don't misunderstand my momentum pools here, right? As long as price action is swimming in them, like we're okay. If it hits the bottom and then starts breaking down underneath the bottom of it, we're drowning, okay? And then if we can start a new day or a new time period and we can get back into our momentum zones and we can start swimming around, there's a chance that we can get fresh air. And if we can sit above the momentum pool, then we're just like sunbathing. It's everything's chill, everything's cool. So everything's chill, everything's cool from that past perspective. However, I do have to update these momentum zones. Although I have the 2 to 5 day projections, and this daily already expired yesterday, and then the 2 to 5 day is just a projection. It's not a real deal. So let's go ahead and let's get the real deal for the daily over here, and you can see that we're well above my momentum zone for the next 24 hours. And so that momentum zone, that momentum pool is good for the next 24 hours. And then the 2 to 5 day projection is where we want to see it to be, which is underneath our daily, which does suggest momentum is to the upside. And so, guys, like we have a fairly sizable buffer room for price action to just swim around over the next day or two, just to remain bullish. And yes, the top of this zone would suggest 19,400, but we know from other measures that 19,650, 19,500 is probably more realistic for that. So let's go ahead and look at the signals that I give. And I think I'm going to move uber bullish up to the weekly 4 EMA. Bullish bias, definitely we can keep that around here at the top of our momentum pool. Um, but considering the professional exchange, I do want to consider the professional exchange. So, mm, hmm, that's a judgment call. But I think this price at the top of my momentum zone is a compromise between the professional exchange and the 24/7 exchange, which was 19,250, and the 24/7, pardon me, the professional exchange was 19,500, and then the 24/7 exchange was 19,250. And so the top of this box is approximately 19,375, right? Oops, maybe it's 85. No, that's pretty good. Well, let's just call it 19,385. And just to make sure that we're above there. And then for a bearish bias, I do think losing 19,250. Yeah, let's go by the MACD here because that's telling us something. And then of course just our uber bearish zone here is probably going to be under our 2-day Stokes. So these are the signals that I would give you for the next day or two, which is basically bullish, very bullish if we're above 19,636. I'm leaning bullish if we're above 19,385. Just noting that the professional exchange suggests it has to be 19,500, but I just include that with this one. And then bearish bias under 19,250. And then I just would seriously watch out if we're under 19,048 because we'll have lost basically all of our short-term Stokes. And so everything's just going to be pointed down for sure. And guys, so those are your key levels to watch for Bitcoin. And if we do just go ahead and take a look at our EMAs, then we can see that, of course, on the 4 hour, we are just bullishly tagging the 4 in a check back. On the daily, we are just checking back perhaps to the 21, could go as low as 19,500. And actually, we could go as low as the 9 here, and that's that 19,400. So that, yeah, 19,400. Maybe 19,400. That's going to be the bullish bias. And we are in a squeeze play to the upside, though, still. And then on the weekly, you can just see that this is negative, quite negative. And we could actually end up getting a alpha 9 knockout when this 10 simple moving average and this 9 EMA like cross over each other. There could be another knockout coming ahead. So just be aware that when these things cross, they tend to result in big candles to the downside. Even though that's a bullish crossing, for some reason, price action just moves to the downside when they cross on average. Sometimes it doesn't happen, but usually it does, guys. And so just watch out for that. Let's see. Let's see. There, it is nice to see that our 4 EMA on the weekly is curving up. So yeah, we're in an interesting place, guys. Like this thing could easily go to a 20,200. We already tried, but for reasons I pointed out earlier with the second boss, that a blue macro downtrend, we are struggling. So just watch out. It's still hit or miss, but slightly in the bull's favor, guys. Okay, can't deny that. Let's go ahead and go over to Ethereum. And for Ethereum, we can see the EMAs on the weekly are actually significantly more bearish than Bitcoin. On the daily, we do have the same type of squeeze play going on as Bitcoin, so that's okay. The 21 is pointed a bit down. And then on the 4 hour, yeah, I mean, this is just a bullish check back, of course. So let's go ahead and take a look at Ethereum's momentum zones. And you can see here that, which one is this one? Okay, that was the old one. This is the new one. Okay, good. Okay, so you can see that according to my old, this is too good, guys. This is too good. Look at this. According to my old momentum zones, we had to maintain inside of this pool, right? Look, right when we lost the bottom of the pool, what happened? We just drowned. So guys, like my momentum pools, look how brilliant they are, guys. Like this thing just works. Just inside the pool, like on top of the pool, we're just like chilling, just cool. Everything's fine. We can go for a nice swim, right? Even stick our toe to the bottom, right? But what we don't want to do is get trapped underneath the bottom of my momentum pool. We get trapped under the momentum of the bottom of my momentum pool. We're dead and buried, like we drowned. And so look, just boom, just death, right, guys? Like that's the predictive ability of these momentum pools when we do it right. And then what happened? Okay, well we died. Of course, stocks and crypto, they're like it's like Mario Brothers. You have infinite lives, right? As long as you have money, right? Then you can get another life, right? And so we got another life. We got some type of a magic mushroom or something, pulled out of our butt, right? The way that these assets do. And then look, we pumped back into the pool. We got a nice check back. We burst out of the pool, and where did we hit? Right to my 2 to 5 day projection. Boom, right? Boom, 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 right? Like check that out, right? Like that's pretty cool, guys. So this momentum analysis that I'm developing, it really does work extremely well in the different forms of momentum that I'm putting together to create this system. And we could see a healthy check back to whatever our new momentum zone is, right? So let's look out for that. And of course, had we broken above this, it would have been just uber bullish. But because we weren't able to, of course, I can't say that's uber bullish. That was just what was expected. And by the way, this was a bearish orientation. Okay, guys. Again, whenever the white 2 to 5 day projection is on top, right, on top of the blue daily pool, then this is actually bearish. Okay, you do not want your longer term momentum on top of you. You want it below you, right? So you're kind of getting pushed, like your daily is getting pushed forward, okay? Like getting pushed up by the longer term play. But if the longer play is above you, that means that you have much more work to do to like get your long term in order. And so it's not good that the longer term momentum is above you, and that's probably why we're going to need to have a check back or something, okay? Like there's nothing bullish about that. You got rejected from it. And so, of course, we can get accepted into it and then bounce off of it. And then, of course, we have to update it, which I've already done. And so let's just delete these ones because they're no longer valid. I just find it cool when it works out, and it works out quite often that way. And then look at that. Because all of our indicators got reset, as I mentioned earlier in this episode, due to the dump, and because we got a new Mario life, all of this momentum got reset. And it just so happens that our 2 to 5 day projection is the same as our daily projection in this case, and that's a good thing. You want it to be pretty much in line, or you want this white box to be underneath the blue box, because that would suggest you get a little bit more lift and it's a little bit more rigid. And so, guys, for Ethereum, like we're still going to be bullish above 1300, and we don't want to lose 1285. And then let me take a look at where our momentum zone is. Yeah, I would actually say 1275 is still the level we don't want to break down below. So 1275 gonna give me a bearish perspective. I really want to see above 1300 in order to be bullish, and then I'm going to be uber bullish above 1330, and I'm going to be uber, just super bearish underneath 1235. So those are key levels to watch for Ethereum. And also for Ethereum, we did want to take a look at that daily, um, look at that daily volatility that's been building up, and it is starting to expand. And so I don't know if this is going to head to the upside or to the downside. Just like Bitcoin, we're kind of waiting for it. We are kind of close together on this Stokes. Let's go ahead and check the professional exchange. Yeah, I mean they're just like really close together. So above 1300, just like what I was saying, right? And then for this one above 1275. Okay, so similar to what I was saying for bullishness. Um, like both of them agree, like we want to stay above 1275, and then conservatively, you really want to be above 1300 in order to consider that that volatility is going to expand to the upside. And that is a huge amount of volatility, guys. This is like way more volatility than what's on Bitcoin. So I don't know what's going on with Ethereum, but this is a monster volatility play potentially, okay? Like depending on how stocks go. So look out for that. And by the way, Ethereum has been following stocks pretty closely recently, so um, perhaps that represents a joining in with the stock market. Guys, let's go ahead and just to briefly check on stocks. If you do look at this price prediction that I made back here on September 30th, again, like just truth in advertising, guys. Like, look, I had a play down to like 11,000, a bounce up to 11,300, and then a drop down to 10,400, right? I made that projection 2 weeks ago for the NAS 100 using the NQ1. And let's just see which levels did we hit, right? Check that out, guys. Check that out. We hit 11,000 precisely. We hit 11,800. What was the level that I was suggesting? Um, pardon me. Was that the? Oh, that was the wrong level. Sorry. We hit 11,000 right here, and then we smashed up to 11,200. What was this level? 11,300. So what was the top here? 11,200. Okay, just a little off. And then where did we wick down to? Right, we wicked down to 10,400. So we hit all three of those key levels, and of course this was on a different time frame. So what am I on? Daily? Yeah, let's go to the 4-day, and you can see how that worked out, right? So just a boom, 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 and guys, it's just nice when that stuff works out. It does suggest that what you're doing really does make sense, and that it's reliable. And so, guys, what I'm looking at here is let's just start. Let's just start from a logical order. Let's go ahead and just take a look at our supports that we have on this thing. Got kind of an interesting zone coming up if we continue to fall. Not really sure how that's going to shake out, but yep, let's go with the long-term trend. This is the one that'll look more interesting. So on Nasdaq, really I would consider this to be kind of a flat level. This is a little up and down, up and down. But overall, we do have this type of a wedge here, and I think we could potentially come all the way down to the bottom of this wedge if we have a global financial crisis this year. But as for now, as for now, we do have a fib retracement that we're bouncing off of, which is basically the 618, and so that's nice. And we also have this through line, which if you see this kind of general price action, you can see how over time we tend to keep on this through line ever since back here in the 2010s. Like we've been going through this through line, but this is regular price action, okay, during like normal times. And so I would suggest that the stock market is still overpriced and that we could find our way to the bottom of that range. Okay, so maybe we don't get to the bottom of this big macro triangle, but maybe we get to the bottom of this range. And you can see we touch the bottom of that range quite often. And since this is normal times in that range, and this of course was just the Trump massive, $9 trillion hyper bubble of super inflation, right? And so of course we're coming off of that cocaine high, right? And just to get back into a normal range, we'd have to be down here. The market is feeling a little bit bullish because we are getting back to normal, basically, starting to get back to normal. But there is a bottom of the range to normal, and so I would suggest that if we're going to have bad times ahead of us, if we're going to have a recession, then probably we're going to see the bottom of that range. That's my theory, okay? And then if we have a global financial crisis, then maybe we see the bottom of this wedge, right? That kind of depression stuff, blah, blah, blah. But just for a normal range, I think we're going to end up on the bottom end of that. That's just my theory for right now, guys. Okay, so that's your big perspective on Nasdaq. Yes, we could get a bounce in this little corner and then break down, but I think this is our ultimate target area, guys, for a reasonable downside. And then lower is kind of unreasonable due to unreasonable times, but we'll find out. Locally, we do have this type of a price action going on, where of course we hit all those levels that I was talking about. Just boom, 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 whatever. And guys, of course, we've been just chopping around in my momentum zone. The key thing to look at for this price action on the Nasdaq is this downtrend, these downtrends that we have here. Now, this is very choppy and very disorganized, but on the Nasdaq here, you can see we had a little bit of fake out here, but overall we have this kind of channel. And we're at the top of that channel right now. If we get a rejection here, like a hard rejection, it could be pretty bad. Yes, we can get a pullback and then keep pushing up. And then I would suggest potentially up to here. Let me see. There we go. I do have it marked out. This is kind of the possible trajectory that I have here. So I would see us probably getting to the bottom of this kind of like a green range that I have here of support, maybe somewhere around 10,100, 10,250 on the NQ1 NASDAQ. Or we could break through this if we have the energy to break through this area. We could find our way up here to 11,700-ish, right? 11,800-ish eventually, just depending on which one of these lines is more respected, the red one or the white one. And so, guys, that's how I see our price action moving. And I would suggest this primarily because we also have this kind of trend down here, which would lead us just naturally down to my blue box. So either we bounce here and we make a go for this kind of uptrend and retest this uptrend that we broke down from, right? Even as high as 12,400, 12,500, maybe 600. But I think ultimately we will fail, right? Just like we failed here, just like we failed here, right? Just like we broke down here. And that even if we make a play out of this, probably we're going to come back down to this blue box. We never completed the bottom of this trend line, and you can see every time we come back to the bottom of this trend line, and we just didn't do it here. That could suggest bullishness or a slowdown of momentum to the downside, but if we continue to be bearish, and it looks like we're headed into a recession and all that, then I would suggest that, again, this blue box is quite a reasonable target, okay? So let's find out. But again, you can see my projections for a possible path forward. We really can't get rejected here. We have to break through this area and then use that red line as support if we want to get up to these bullish areas. And right now we're getting a little bit of rejection. So that's price action. Looking at momentum, you can see that we are respecting that momentum zone that I marked out a couple days ago. So again, like these momentum zones, they're just no joke. We lost the bottom of my momentum zone the other day, right? Check this out, right? Because this is the 4 hour, so this is a couple days. Like we were swimming around in my momentum zone. We got to the bottom. We broke the underside of it, and then we drowned. See how that worked? My momentum zone like just worked absolutely perfectly there, okay? This is not support and resistance. This is momentum, guys, okay? It's a totally different animal that I'm charting with here. And then what happened? We got our like Super Mario like free life because this is stocks and crypto, basically a video game. All right, we got a power up somehow. The market makers came in and powered us all up. God knows how that works, okay? So we got some kind of a God candle up here. And then look, where are we sitting? Right on top of my momentum zone. Isn't that funny, guys? So don't dismiss momentum. That's a serious thing to be looking at. And of course, we've gone over EMAs. And we've gone over price action. We've gone over momentum here. I can delete these previous days because they can be updated now. My new momentum zone for the next 24 hours, right, does suggest that we're starting off in a little bit of a precarious spot, just swimming in the pool, not sunbathing on top of it, but we're just swimming around. We don't want to lose the bottom of it. And then we have the 2 to 5 day projection, which is actually bullishly below us, okay? Because that means we have a lot of leeway, okay? So you want to see that white area below you. And for our momentum markings, see what I've marked out over here. And so, yep. Okay, so I would see us very bearish under 10,640. I would see us as bearish below 10,800, maybe 10,900, okay? Because we'll lose that MACD on the daily. I would see us as bullish over 11,080, and I would see us very bullish above crossing this line, which also corresponds with our weekly 4 EMA at 11,000. We can call that 250, 11,250, and then I would be very bullish, okay, on stocks. So that's the Nasdaq, the NQ1 NAS 100 mini futures. Got it? Let's go ahead and look at the volatility on this on the daily. And I don't see anything interesting on the daily. How about the weekly? Yeah, I mean, very high. I don't know. This doesn't quite work the same way that that a crypto does. So the 4 hour, 4 hour is expanding, but it is coming to a close. So we are going to have a volatility flip pretty soon. And if we're below 10,675, then potentially that could be oriented to the downside. Not sure how to make of that, but that's volatility for you with the Nasdaq, guys. Let's go over to the S&P 500, and for the S&P 500, let's just go ahead and take a look at our EMAs really quick. And you can see we're getting limited by the 89, which is pretty much okay on the 4 hour. Just doing a bullish check back to the 9. Let's go ahead and look at the daily. On the daily, we still have the possibility of a squeeze play to the upside. This is a little bit negative and flat, so we don't want to lose this level. This level of 3,670 seems pretty crucial to hold. I mean, we could wick down, but we want to get back above that as soon as possible. Otherwise, this is going to be a failure. Let's go ahead and take a look at the weekly, and you can see we're just well under anything bullish. In fact, we're getting kind of rejected from the 200 right now. The day's not over, well, the week's not over. Oh, we only have 11 hours to go on the week. We're going to close underneath the 200 potentially on the weekly, so I don't like that. But anyways, this is kind of a bearish close to the week there. Don't like that. Don't like that. But yeah, I really want to see us hold a little bit higher of a price on the weekly. Let's find out what happens. Some of the other indices may disagree, so just going to ignore the 200 for now. But overall, not a good close on the weekly. Let's take a look at volatility on the daily on the S&P 500 ES1 mini futures. We are oriented to the upside more or less at this level. You can see it's so close together. So, that 3,600 really is essential to hold. And then we could be pinching off our volatility here and then starting a new one. So, yeah, I'm going to have to measure volatility later. Just stock market is a little bit weirder. We do have that bullish divergence still on the daily, but maybe that already played out. So, not sure if that means anything. But we should hold above certain levels to maintain that. And on the 4 hour, let's go ahead and throw on some something to chart here. Let's go ahead and look at our support and resistance lines. Nothing standing out to me too much. We do have this resistance over here. Just zoom out and look at our macro lines on the S&P 500. Go to the daily. And you can't see we have significantly further to fall on the S&P 500. The S&P 500 is terrifying compared to the Nasdaq, but it doesn't have to come true. And the way I'm going to moderate this thought is by thinking about these through lines. Okay, so we have these through lines, and that tells you a little bit more what normal is. And you can see on the S&P 500, like we've kind of gotten back to that bullish normal. Here's the cocaine, like just free money, infinite money spending era, and then here's the normal levels, and we are at the bottom range of the normal levels. It's just we also have these weird wicks underneath them, so I would expect perhaps to wick under it, and then we would have the chance to recover. But this is also a good bounce point, so I can't knock the S&P. It does look different than the Nasdaq, okay, guys? And then, if we have a global financial crisis, I would suggest probably we could come down to these levels, maybe flash wick down here, 2450, or below. But I think that the through lines are probably more realistic, and then some area underneath here is what we're going to be looking at. I should probably put a blue box in this area somewhere, but it's just very hard to sort through all of these details, guys. Let's go ahead and, oh, there we go. I do have that zone. Duh. Okay, there we go. And actually, where we're bouncing right now is along the lines of the 0.5 on the retracement of the fib retracement on the S&P 500. So here's the 0.5. We perfectly got a bounce off of the 0.5. But could we come all the way down to this golden zone, right? Or at least this area that I have marked out here in green as where I hypothetically projected that we could end up based upon like these kind of like through lines theory, where we have a little range underneath them. Yeah, absolutely. Both are within reach, and that would be perfectly normal, and then we could just continue on our way, okay? So maybe we just get a check back in this area, and then we just continue to go. And just pray we don't break down from these golden zones, okay? And then where's the global financial crisis? Yeah, look, the 886, right down there around the 886. So that's just a coincidence, but there you go, right? Like that would make sense for a global financial crisis. Let's turn this stuff off. Well, that's our major downturn, so I can leave that on. And for these local levels, similar to the Nasdaq, I would expect us to, if we do break through this area, I would expect us to try for 3,900. Okay, and you can see this area up here, how we did that. This is also the 200 on the daily. So trying to grab up for the 89 or the 200 on the daily, that would be what I would suggest if we do break through this area bullishly. If we just have a bullish check back and then continue to go, then yeah, I would look towards 3,900 on the S&P 500 ES1 mini futures. You can find the equivalent on your own S&P of choice, right? SPY, whatever, SPX, whatever you use. And yeah, otherwise, what I would watch out for is some type of rejection along the middle zone, which we've had multiple times. And so if we did that again, that would be a rejection right here, and that could take us all the way back down. Okay. And so yeah, there's my projection for the S&P 500, and yeah, the favor is towards the bulls right now. Maybe to test this upper height of this kind of broadening descending wedge that we have going on here. But just to be very careful about this midline, we do have to break above our current price. Like I really want to see us above 37.30 for sure. Let's see my momentum zones. Let's see. Oh, there we go. I have bounce lines here also. So yeah, you can see how I would expect us to break down or to pump up based upon this level right here. Okay, and you do see how we respected my previous momentum pools over here. Let's go to the 4 hour so that we can get more fidelity. You can see we just swam around the momentum pool quite chaotically. When we really lost it, we just headed all the way down. Got our Super Mario free life for some reason. That's just how it works in stocks. Bounced all the way up with a magic mushroom or something, and then grabbed the top of my momentum zone. So again, momentum zones just proving themselves time and time again, asset after asset. Uh, this was actually an okay orientation on the last uh, setup for momentum, which did suggest the possibility for continuation to the upside. So that's what we got. So, the momentum wasn't lying there. But of course, just structurally, we did have that area to tag. And then our new updated momentum pools would be something like this, which does look even more bullish for us in that we have a big area to swim around in. And then we have this kind of critical 2 to 5 day area way below us. I mean, not way below us, but underneath us. So that's good. A little extra buffer room to swim around in. And yeah, we're losing it right now. I mean, we're losing the top of the pool right now, but as long as we just swim in there, no problems. We could do anything in here, right? As long as by the end of the day we end up inside of the pool or above it. And let's see here. If I wanted to make levels to suggest where we're very bullish, I would say it has to be above this downtrend here. There's no other way. We can't get here without breaking this mid channel. So, and it also happens to be our weekly 4 EMA. So just boom, guys, like uber bullish above 37.20, bullish bias above 36.80, which we are losing right now. Just neutral in between, and then bearish bias underneath the MACD at 3600, but obviously we can wick lower. And then, yeah, just very bearish underneath 3545. Okay, so those are your key levels for the S&P 500 according to momentum. And let's see here. I think I checked everything: momentum, price action, volatility, and then our EMAs for the S&P 500. Let's go ahead and take a look at the dollar. Oh, look at that. The dollar is making a little bit of an effort for recovery. That could end up breaking down again, but just watch out for that tricky Dixie over here, right? The DXY, US dollar. It's not going to go down without a fight, and it has just checked back to the 89 on the 4 hour. And look what it did before the last time it looked like it was breaking down. Checked back to the 89 on the 4 hour before just majorly pumping. So is this a fake out to get everyone to FOMO into a pump today? Yesterday, and then is everything just going to spike up? Is the dollar going to spike up, and then all of the assets are going to break down again? There's a huge possibility of that, guys. So yeah, just be careful. Be careful, guys. Like this dollar doesn't give up without a fight. And I don't think the Fed is going to give up either, right? I've already covered that in the commentary section of this video, and yeah, I mean, guys, just watch out, okay? Like I've set the levels for bullishness for all of the assets that we looked at: Bitcoin, Ethereum, the S&P 500, the Nasdaq, and so you guys understand where I'm at. But it all depends upon the dollar. Now the dollar is breaking down, and so it hasn't completed my pattern here. I really wished it like had made a neckline up there so that we could have confirmed a head and shoulders or something up here. But there's still the possibility that some type of neckline is going to be formed here. So if we do come back up to this high of 113.70 on capital.com, then that's going to make a neckline that if we break above that would suggest continuation to the upside, perhaps to even 118, which would be monstrous and destructive for the stock market, guys. So be aware for that. VIX, the volatility index for the S&P 500, just hanging out up there, guys. Like it still looks like it's making that head and shoulders that could push up. So hasn't lost anything, just doing a bullish check back. And of course, if it does pump up just like the dollar, that's going to be hell for trading. So, be aware, be aware. I don't make the rules, just trying to help sort you through it. USDT, you saw people just panic selling and then panic buying. That's ridiculous. So, but we did break this level, and once you break a level, you do have a tendency to retest it. So, pardon me, it's getting pretty late here. Yeah, I mean, so, this could be a fake out to the downside just as much as this was a fake out to the upside. We could end up pushing to a new high on USDT, suggesting people just getting the heck out of the market if we do have some type of a turnaround and if the dollar continues to push up. And Bitcoin continues to threaten to lose 19,500, and that would be the danger for us. That would be a squeeze play to the downside, most likely. Let's see, US 10 pumping up, but starting to break down now. Ugh. This is the yield curve inversion, right? The chance that we have a recession, like a major recession, and it is just pushing down again. It is about to lose its little area lows here, and that would be very dangerous. So, yikes! This is not good, my friends. This is not good. Like, we could have a bigger recession. So we want to see a nice bounce. We need to get above this area and start trending upwards, but that's a lot of work to do. As for these altcoins, I think I'm going to skip it. They all did the exact same thing that Bitcoin did. Like, it's pretty obvious, right? Break down, pop back up, just in a little bit more dramatic fashion. And overall, a little bit more weak than Bitcoin. ZIL, KDA, Credo, Cpool, nicely done, but still a lower high. XRP, also a lower high, but also nicely done. ADA, I mean, this is bearish as heck, but nice try to recover. CRV, looking actually pretty bullish, so I'm not. We did tag the line that I did suggest that it would bounce off of, so getting pretty close to that support down there. I'm not quite ready to endorse that one for a turnaround, but that is interesting what it just did here. So looks interesting. Let's just watch it because we still have some work to do on CRV. And Flux, likewise, guys, look at this. We dipped into my levels. Boom. This is brilliant. Boom. 13% play. Beautiful play off of this one. Nice. I hope some of you guys were able to capture that. But otherwise, we're just hanging out there. If the market turns bearish, then we could definitely break down to the bottom of the screen zone. On the log scale, that is suggestive that that's the bottom of the area. Of course, this could be a lower high, and then we could just end up putting on a lower low, even lower, right? So just to be aware that this market can continue to turn around. This uptrend here doesn't have to hold. This could just break down. So just be aware, guys. Like, always be taking your profit, all right? Always be selling. Put food on your table. Don't be loyal to these coins. They will not be loyal to you, okay? So be clever little alpha monkeys. Not a perma bear, not a perma bull. Just take the opportunities before you. Guys, that's your alpha for the day. Stay safe and happy trading.